following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the June 6th, terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that, well, just simply tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that is what it's all about. So let's go look at one of our tools. This is the tool I call Make Life Worthwhile. You know, over the years, I've sought out ideas, principles, strategies to all of life's challenges. I've come across 4 simple words that can make living worthwhile. So I'm going to share those 4 words with you. The first one, I believe life is worthwhile if I learn. I believe that what I don't know will hurt me. So therefore, I like to learn. I believe that you have to have learning just simply in order to exist, let alone just simply succeed in life. I believe that the best lessons are learning from our own experiences, negative or positive. You know, in fact, quite frankly, as you know, you've experienced this before. We typically learn more from our negative experiences than our positive. We learn to do it right first sometimes by, unfortunately, doing it wrong. We also learn from other people's experiences. Now, this one's really powerful, and it's whether it's both positive or negative. And I've always said that it's too bad failures don't give seminars, because that information, think how valuable that information is. We would learn how maybe someone who had it all and then messed it up may have come back even stronger than ever. I remember reading Inside Our Tiger's Den, and if you haven't tried the Tiger's Den out, you really should. Go to the homepage of TFNN.com and check out the Tiger's Den. I remember a couple of days ago, and somebody had posted something there. They, had lost it all, and they came back even stronger than ever, and it's a great personal experience. I hope at some point in time, maybe they might share. That's a personal story, what have you, but just think about how much we can learn from other people. You know, the underdog out there. Yes, I talked about it is important to pull for the underdog. Learning from other people's experiences and mistakes is valuable information, because we can learn what not to do without that pain of having tried and failed ourselves out there. Number 2, secondly, life is worthwhile if I try. You can't just learn. You have to try something to see if you can do it. Try to make a difference. Try to make some progress. Try to learn a new skill. Try to learn a new sport. Try to learn a new technical indicator. Try to learn a new way to trade. Try to learn a new way to look at a chart. It doesn't mean you can do everything, but there are a lot of things that each of us can do if we just simply try our best, giving it our best effort. I always say, why not just simply go all out? Number 3, so we've got 2 words out here so far. The first one is learn. The second one is try. Third, life is worthwhile, I believe, if I stay. If I stay, I believe just simply that you've got to stay from spring until harvest. If you've signed up for something, then see it through. Sometimes things just don't work out, and, then it's over. And that's the end. But don't just end things in the middle of something. Maybe on your next project, maybe you pass on that one. But if you've signed up for something, see it through. I like to think of it as like, have you ever gone out there and planted a garden and you put out all those seeds? Do you expect all those seeds to actually grow through and become a plant? In fact, most of the plants, that fail, it's because they're coming up towards the hard part of that crust of the earth, and they just simply give up instead of seeing it through out there. I say stay and see it through. Lastly, life is worthwhile, folks, I believe, if I care. I believe that if any of us care, if you care out there, you will get some results. If you care enough, you can get incredible results. I believe that we should care enough to make a difference, care enough to turn somebody's life around, maybe care enough to start a new business, care enough to just simply change it all, care enough to be the highest producer, or just simply care enough to set some records. So care enough, folks, to win. 4 powerful little words: learn, try, stay, and care. So my question for you this morning is, what difference can you make in your life today by putting those wonderful words to work for you? let me just say, thank you for caring enough to spend your morning with me. I most certainly care about you. So let's go take a look at these markets out here. The bears here now trying to take not continuing, I should say, take control of the market here, going after the lows. We're taking a look at the ES Mini out here, taking a look at the lows that came in yesterday at 3 in the afternoon. That low, 1605.50. Right now trading out at 1606.50, has gotten down to a low of 1605.75. So the bears here making another run, a relentless run. They're up against a number of patterns out here that absolutely have completed in the marketplace. You've got a 1 to 1.272 A to B equals CD. We're looking at the ES Mini. That's coming off of the high at about the 1685-ish, it looks like. 1685 would be your B point out there. That was at 11 o'clock on May 22nd. Your B point that you would use, there's a hammer candle down here at 10:30 in the morning on May 24th out at 1634.50. Your C point is going to be the top of the first Gartley sell pattern that we had inside the ES Mini, right at around the 1672 level. 1 to 1 is the 1621 level. That completed back here at this piercing candle at about 12:30 on June 3rd. Now, what the ES Mini has done, it's made the 1 to 1.272 A to B equals CD down. That's 1607.50. You're at 1606. You can also see, if you're watching us on TigerTV, thanks so much for doing that. Maybe you're listening in on the radio or your mobile device at TFNN.mobi. What you would be looking at if you went to the homepage of TFNN.com and you had a smartphone device, you could get the live stream of the show, and you would see this green shaded area. You'll see a number of colored patterns here on my chart. The green one is the 1.618 butterfly buy pattern. So that's what has set up in the marketplace. The market had moved down at about 1 o'clock yesterday afternoon, got in that extreme oversold territory. That just simply worked its condition off, as you can see here, worked it off all evening long. If we take a look at what kind of retracement was done, a very shallow retracement so far. Didn't even make it up to the 0.382 retracement of the leg down that started yesterday at 11 o'clock in the morning. Probably made a 0.382 retracement if we take a look at this leg down right here off of this swing point at 11 o'clock. Oh, here's one from 11 o'clock yesterday morning. Let me go back to that one. And, the 0.382 is 14.50, and so far what we've seen is a high of 16.16 and a quarter. That was at 8 o'clock this morning. So what does this mean? This means right now we should see a very strong support level right around the 1607. What does it mean if it fails? Well, we go back a little bit deeper into the chart here. Now, this is a 30-minute chart, and you can see all the different expansion patterns that were being formed on the way up. There's these blue little patterns or butterflies that you see, a lot of butterflies on the way up, and I'm talking about, because we're looking at a 30-minute chart, coming off of the April 18th low out there. Now what you're starting to see is expansion patterns on the way down. Another indication that the bears at a trend change has taken place inside the market. Now, if we come off of the low from April 18th, all the way up to the high that was put in on May 22nd, the 0.382 retracement, the normal retracement, is 1626.54. Well, we're below that. We're at 1607 and a quarter. So if, in fact, this 1.618 butterfly sell pattern fails, what the ES Mini will do, it'll travel down to 1589. Why 1589? Well, number one, at 1589, you get a 1 to 1.618 A to B equals CD down, coming off of the highs out here. You also have a 0.618 retracement of that entire move off of the lows back in April 18th. So 1589 is a target. If the 1607-ish area here fails, but there should be some pretty decent support here. We'll see if there are any buyers out there that are going to be buying the dips. But if they do, we know the reasons why. Let's go to our first caller. Let's go to Dan down in Miami. Dan, thanks for calling. Thanks for holding. How are you this morning? Dan, do we have you? Good. I'm doing fine. Thank you.
Okay. I got a chart of the dollar weekly up here.
Yes.
And last 2 weeks ago, there was looks like it did 249,466, and my chart goes all the way back to 404.
Yes.
And I I go back to
Now, what are you using the U.S. dollar index chart for? What are you looking for here? Are you long or short one of the currencies in this basket, or are you using this to try to price it against commodities? Tell me what you're using it for, and then I can try to give you a read on it.
I use it for the overall market, and sometimes I buy in gold. I trade, like the GDX.
Sure.
But basically, I'm looking for where is the strength in the dollar on the weekly chart. Mine goes all the way back, excuse me, to 04.
Yes.
There's buying. Low was 78.7, 224,000 contracts traded on 5/13 of 11. Then there was buying on the weekly of 5/7. The high was 89, and there was 221.
Well, let's take a look. So let's take a look at the U.S. dollar index, and let's take a look at what it's doing right now. We'll start off with the weekly chart because you're looking at that. So I've got that up on my screen here now. On the weekly chart,
my point is the volume 2 weeks ago has been the heaviest since 404. That's my point. Where is the strength in the dollar? Daily and weekly. That's what I'm looking for because I use it for the overall market, the index and stuff like that. So could you explain that for me, please?
I will. When we come back from break, we're going to go back down to Miami. We're going to take a look at the dollar. Now, with regard to the overall market, Dan, I'm going to teach you to take a look at the euro-Japanese yen currency pair. That's with regard to the stock market. With regard to the dollar, we can take a look at commodities. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Sellers still trying to get out the door here. Dow futures off 17, S&P futures off a couple of points. We're going back down to Miami, and what we're going to do, folks, we're going to take a look at the U.S. dollar index. First, we'll take a look at it on a daily chart, then a weekly chart, and then we'll take a look at the actual currency pair that you should, in my opinion, you should be looking at to correlate to the markets if you'd like. And the markets, but I mean by the markets here, Dan, I'm talking about the stock markets. And then we'll take a look at how you would use the U.S. dollar index, in my opinion, to take a look at commodity behavior out there. So let's start off with the daily chart. And let me give you my first answer with regard to where I think strong support is. Strong support on the U.S. dollar is going to be right at about this black horizontal line going across my screen. It really lines up with the swing point high from November 16th, 2012. So we're going to say the price is right around 81.51. Now, if we go on the back side, if I go a little bit further back on the chart here, it's an area that used to be an area of support. And the way that I like to, the way that anyone should really use Japanese candlestick charting out here is just understanding where support or resistance lines are. Because when support gets broken, in this case here, I'm going to just simply come back to the June 18th of 2012 level, which you had nice bullish candles out here, and it acted as an area of support for a while. In fact, it acted as an area of support until it was broken in September of 2012. Old support then all of a sudden becomes new resistance, and it bears out this way because what I just gave you as the line, the number of 81.51, that was first tested as resistance in November 16th of 2012. The U.S. dollar index got up there, went ahead and gave it back, came back, made a 100% move of a move by coming all the way back into the swing point from September 14th. And then once it got up above that and broke through there, which it did. It did it with conviction on February 25th, 2013. Went ahead, made that .786 Gartley pattern in the U.S. dollar index. I got up there, pulled back. You know, when you make a Gartley sell pattern, which is what it did here, it pulled back. And when it pulled back, Dan, it came right back into that same line. So old resistance became then new support again. So that's where I would expect support to be. Also, I've got a little green squiggly line on my chart here, which is a 200-day exponential moving average. That number right now is 81.64, so that should be pretty good support for the U.S. dollar index. That's the daily chart. Now, what the daily and the weekly both show is that we have a U.S. dollar index that broke that .786 Gartley sell pattern. That says to me it will make a run for 85.78. Maybe it comes all the way back to that support line, and then it takes off again, but 85.78 is where it eventually wants to go to at a minimum. That's on the daily, and really it's the same thing going on the weekly chart out here. The weekly chart shows that it's up against support right now, and that support is nothing more than the rising price channel that takes us all the way back down to September of 2011. I'm using the open of that session, which was 73.79 out here, and then I'm using really the close of the session from December the 14th out here. So we can see price right now is right up against that. There's also a declining tops line. That declining tops takes us all the way back to June 11, 2010. In this case here, I'm not using a channel line. I'm just using a trend line. I'm coming from the top of that, 89.10. My next touch point out here, Dan, is going to be July 27th's high out at 84.25. And we can see that the support of that level is just a tad below where the U.S. dollar index is trading right now. So I think we're very near support. If this area gets busted, then on the daily chart, I would suspect the number that I gave you, is where the U.S. dollar index will head to. Now, Dan, what I'd like to do is I'm going to move over into take a look at the a chart here. This is a great chart, in my opinion. Of course, I'm the creator of it, so but let's take a look at this. Is a chart here that shows the euro-Japanese yen currency pair. That is reflected in the bars. So that's the candlesticks that we're looking at. So that's the euro-Japanese yen. The black line on here is the S&P 500. Notice how the S&P 500 does a really good job of following the euro-Japanese yen. The red line on here, Dan, is the actual U.S. dollar index, which has been inverted. The U.S. dollar index means if the red line is moving down here, the U.S. dollar index is getting weaker out here, and you would expect that the market is getting stronger, and you would expect the market to actually pull. Hold on, the red line. The red line is the U.S. dollar index, which I have inverted here, and you can see that it just simply is not at all following the market. It's not at all following the black line, which is the S&P 500. So your real correlation. I'm sorry if I just confused you there. I'll clear that up as I come to the next break. But I hope that helps you out. What you want to use for commodities is the U.S. dollar index. What you want to use for the actual market is the euro-Japanese yen. All righty?
Okay, thanks.
Okay, Dan. Okay. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, the Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow trading off 4 points out at 14,956. The S&P trading at 1607. That's off about, it's really flat. Composite at 3406. Russell 2000 trade at 968. Really a flat market. The composite is up 6. Google up 4. Apple up $1.49. SodaStream up 361 right now on a possible buyout merger opportunity out there. Google up 470. Cons Inc. CONN up 6%. That's up $3.09. Ciena Corp. CIEN up 227. That's up 14%. We'll take a look in on that. You had Verifone Systems out with numbers after the bell yesterday. They're down 16% here this morning. We'll certainly take a look at that stock chart. That is off 350. Vera Bradley out with numbers. They're down 12% this morning off 271. Francesca's Holdings, they're down 11%. I don't know if they were out with earnings. Maybe they're just taking it on the back end here because of Vera Bradley's numbers. Rosetta Stone off 9% this morning, down $1.58. Our call numbers 877-927-6648. I'm going to go back to Dan's question about the dollar and the U.S. dollar because I didn't get through all the charts out here. But what I want to first do is I want to give you my take on the market. We are going to see a bounce. We're going to see a significant bounce in the marketplace. And I'm not sure. I'll be able to give you an idea of when that is likely to occur. It might be right here during this opening 30 minutes between 9:30 and 10. But the markets now, that does not mean I've changed my shorter term, middle term, longer term view here of the markets, meaning over this 6-month unseasonal cycle. But my expectation is that we are going to see a successful bounce occur. It's going to be a significant one. Right now the S&P is at 1610. It's probably going to be a good 15-point bounce. We'll go back and actually measure it. But, I will tell you my expectation. Now, when I don't say it's my expectation, when I take a look at all the charts out there, everything tells me that we should see a bounce. So for those of you that aren't short, that's a good thing because you're going to get an opportunity to get in on this 6-month seasonal cycle. This is not a low that's being put in here like the November lows or anything. Just simply working off some extreme oversold conditions out here. We're new into this is really the first leg down, and so the dipsters, the dip buyers out here, they'll be back, and as soon as they start to see a few folks rush in, they'll get in here. So we're going to see a significant bounce. It does not mean that the selling is over by any stretch of the imagination. So that's what the charts are telling me. Everything is lining up for that, and that's my take. That's my call on the markets. Now, let's go back here and take a look at the S&P 500. So maybe to make this a little bit easier for you to look at, in this case here, I've actually put up a chart of the S&P 500. So the candlesticks on this chart here are the S&P 500. Then I put two lines. The black line happens to be the Euro-Japanese yen currency pair. Now, what you can see here, and this goes back to the June 2012 lows out here, June 4th, 2012 lows. Now, when you're taking a look at these lines, the red line happens to be the U.S. dollar index, and I went ahead and inverted it so that it would correlate with what our expectations would be of the market. So as the red line is moving down, that means the U.S. dollar index out here is actually now would be weaker. So you would expect to actually see the market travel with it. And so if we take a look, I'm going to start with the black line. I'm going to take a look at the Euro-Japanese yen currency pair. And you can see when you take a look at these lines, what I make sure is don't be paying attention to where they are traveling on this chart because it's not correlating the x-axis with regard to price. So this is just simply from a directional standpoint. That's all that you can really use the currency pairs is just to understand the direction of the markets. And what you're always looking for, in my opinion, when you're overlaying a currency pair on a chart of something that you're following, whether it's a commodity or it is a stock market, as we have here, you're looking for simply divergences. And divergences are typically, I'm going to say almost always, I mean like 99.99% of the time, what's going to resolve itself, it's going to resolve itself in the direction of the actual currency pair. Now, the U.S. dollar index and the markets certainly were doing the tango. They were doing a dance step out here. But what I found, and just simply by going and trying different tools out here, I found that the Euro-Japanese yen actually does a better job of correlating to the markets. I can't tell you why. I haven't really spent time on the theory behind it because the theory doesn't really make any difference. All I'm looking for is something that does, and then to take a look at divergences and see how they resolve themselves. So we can see right now that the tango is going on in a beautiful stair-step position here with regard to the Euro-Japanese yen currency pair and our market out here. That's the black line. So that's what you really want to use on your chart. That's the point that I was trying to make to Dan earlier, versus the red line being the U.S. dollar index. That correlation came unhinged, and it came unhinged right here at February of this year, February 27th. That correlation really stopped. So the correlation with regard to the U.S. dollar index and the U.S. market. So what I think you want to use the U.S. dollar index for is actually the commodity. So I'll switch over to a gold chart out here, and I've got really gold happens to be the candlesticks that we're looking at inside the market. And what I've got on here, I happen to have the gold miners as well as which is the red line that we're taking a look at. So you can see the gold miners here, which I'm using the GDX ETF out here. You can see how the price of gold and the GDX, they absolutely do a nice tango dance out here. I don't know why I've got tango on my mind, but I just simply do. Of course, I'm not much of the old soft shoe out there, but I'll let her rip, Give me a shot at tequila, and it's no problem. And I'll find some kind of dance step out there. In any event here, if we take a look at the black line, that is the U.S. dollar index that is inverted here. And you can see how this just simply is following along with gold out here. So as this is moving up, you've got the U.S. dollar index, which is getting weaker. You've got gold really traveling along these lines. So, and you can see that this is the U.S. dollar index along with the commodity here, along with gold. There are some times when it's uncorrelated. I can take a look at a time period right back here in the November time frame. November of 2012 in the correlation, but just for a short period of time where it became disconnected really through November 16th. But for the most part, in my opinion, this is how you want to be able to use those currency pairs in order to be able to correlate to the market. So I hope that is really helpful to you. On the 30-minute chart of the ES Mini, let's go back and take a look at that, because that is the one that is, in my opinion, is the easiest and the best one to be able to get your signals from right now. Now we've got it's 9:41, so math serves hears me correctly, we've got 19 minutes before we get into this 10 o'clock session. You're getting a what's a bullish engulfing bull sash candle really right here. So long as the close as we come into 10 o'clock is above the 16-10-50 mark, now we can see certainly where bulls are beginning to show up. Now they showed up down here as well, coming into that 3 o'clock time frame when they created a piercing candle. They also showed up right here at 1:30 when they created a bullish engulfing candle out here. So when I line this up with the different patterns, these patterns here being really more of the intraday charts, when you take a look at these beautiful butterfly patterns, and this tells us that the expansions are really headed to the downside out here because we now have expansions moving to the downside. So a normal bounce really back up to the green line here, the 200-period exponential moving average. That certainly could be a target. If we pull this back, we can see how that's acted as resistance. Basil has taught us all about how to use the 200-period on a time frame other than a daily chart. At least that's a lesson that he most certainly taught me. So I go ahead and keep that inside my tool bag as well out here. So that certainly could be one area. That's around the 1627. That's a 17, 15, 16, 17-point move from where we're at. But what I also do is I know how these butterfly and Gartley patterns typically behave. And on a butterfly pattern here, if you just simply come off of the highs, the high to the low out here, and I'm just going to come to the low that actually so far came in here at the open, the dead cat bounce area, 0.382, that's nothing. That's 1627. That's just simply normal. That's 15 points higher. More likely what we would see is just a move to where? You know what it is. It's sweet what? That's right, Sweet 618. Sweet 618 will take us all the way up to 1646 out there. Trust me, folks, that will be like the bears will be out there just reeling them in, knowing that the change in trend in the marketplace has taken place out here. So I suspect that what we're going to see is a bounce somewhere between 1626 to 1646. I know that's quite a wide swath, and until we actually see the patterns forming, meaning the next move up and then the retracement that comes down. Because what I expect that what we will see out here is we'll see the next Gartley sell pattern that would take place. And what is that going to look like? I can draw this in advance as an approximation. Let's say that the A point happened to be coming in here this morning. That would be the A point. Let's say our B point takes us up to our dead cat area right around 1626. That's where you'll see some folks get off of the escalator or the elevator right there. And then a retracement, maybe it just does a shallow retracement on the way back. And if it does a 0.382 retracement, let me go see if I even just drew that in as a 0.382. Yeah, it's a 0.382 retracement. So let's go with the process here that we're going to make that first bounce, 1626. Then we're going to see the market pull back to about 1617. And then what we're going to see is the next leg. That's going to be the C to D leg, and that's going to be more than a 1-to-1. It's going to be a 1 to 1.272. Takes you up to about 1647 out there. And what that sets up your next Gartley buy pattern. Now, I can't really draw that in because my system won't have the ability to connect the dots, meaning connect the swing points out here. But what we can see is, let me do this. Let me try to erase a couple of things out here. Let me see if I erase this one, if that does it. Let's see, make sure I hit delete. There we go. No, that one didn't do it. I deleted the wrong thing. Hey, say nice going there, Steve. Can't you read? Let's hit the undelete. There we go. Boy. Well, I'll tell you what. At this stage here, let's do this. I'm going to hit delete a few things out here. We know we had that area 1627. I'm just going to come from again the high down to the low, and what we'll see is that's the point 1646. That happens to be the 0.618 retracement of that entire move, and that would be the larger Gartley sell pattern that would be setting up inside the market. So if you're not short, what do I suggest? I suggest you just simply be patient and you wait to see what the next pattern is. Now, does it have to be this pattern that I just drew out there? Absolutely not. I'm really drawing this in advance, but I that's really what it is that we do ahead of time. Is that's what's beautiful about these Gartley patterns, is that you're drawing them off of swing points ahead of time, and that way it helps you understand where your stop should be, maybe where your exits might be, and does this have to happen? No. And what should you do if you're short? I think you should just simply tighten your stops out, knowing that the market needs to work off this extreme over. Now, I'm talking the intraday chart. I'm not talking the daily chart, but it's really the EKG. It's the breathing mechanism of the markets here that are going to help us to understand what's going to unfold next. What has been unfolding has absolutely been these expansions now to the downside inside the ES Mini. And I don't mean to spend a bunch of time here, but I think it is good to do and understand. I mean, heck, I did start the day off with talking about, how life is worthwhile, and that I believe that the first lesson of life is that we've got to learn. We've got to learn all the time, and we learn from our mistakes. If you can just make that a priority, in my life, I've got plenty of mistakes to learn from, and so I've always got educational. But, of course, we always tend to focus on our mistakes versus our successes out there. Look, that is a good thing. And, what I like to say is I like to teach what I preach out here. So I don't just come on early in the morning and give each of us something to think about, that it's not a situation that I can apply to my life. In fact, every situation that I talk about in the morning, I guarantee you is applicable to an experience that I've had or something in my life. So it's not, so I like to be able to just simply teach what it is that I preach. In fact, for all of you that have subscribed to my newsletter service, you then understand why I produce a 60-page news. Now, I have a 60-page newsletter. That doesn't mean you have to read that, because that's the expanded version. The smaller version is typically about 10 to 13 pages. It's easy to read through. It helps to lay out exactly where the market is, where I think the market is, what the charts are telling us the market is doing at that point in time. But if you're looking for lessons, if you're trying to understand these markets or some of these principles out here, just simply go subscribe to my service and do it for 30 days. You've got my email. You got access to me by phone. I've got clients that, call or contact me all the time, or they've got a question about a chart, and so I'll go ahead and do a analysis of that for them as well. So if you're looking to learn out here, then go give my newsletter. You've got nothing to lose. Actually, you have a lot to lose by not doing it out there, because you're going to lose out on a ton of education. So, in any event, that's what I think the markets are doing. We'll wait for the markets. We'll wait for the bulls to really tell us what they're doing. Now, knowing that the market could bounce up to the 1646 level out here in the ES, if we get this bullish engulfing candle that completes here in the next 10 minutes, then what you can do is you can actually, just like when you, because your money is at risk here, I say wait for a second opinion. Second opinion could be buy into the market if you get a move above the high of the bar out here, or just simply a higher close as we come into the 10:30 session. It's a beauty to get a confirmation from the market with regard to what it wants to do out here. But it is going to be all about the U.S. because Japan, they went ahead and gave it up, even though they tried in the Nikkei to push things up at the open yesterday. We'll be right back.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Pretty flat market out here. Dow is up 4 points. S&P's up 1. Composites up 6. Let's take a look at some of the movers and shakers here in the market. Let's start with Verifone. PAY is their ticker symbol out here, and getting crushed this morning. It has a high volume low that it is testing, and it is possibly just underneath it. That high volume low, take a look at this stock chart. This thing fell out of bed big time on February the 21st out here. 50 million shares to the downside. Now, the actual low on this, let me draw the line across the bottom of my screen here. We'll go ahead and put that in red as well. The actual low is a price of $17.93, and it has tested that area here this morning. Got down to $17.85, trading at $17.92 right now. But volume so far, already 5 million shares in 25 minutes of trading. So this thing has got additional big volume inside this. If we pull this thing back even further, looks like what we're going to have to do is go to a weekly chart out here, maybe to get the best view. So let me do that for us. Let's pull this and put this on a weekly chart. And let's see, what do we have out here? Let's just take a look at possible retracement levels coming off of the lows inside this, which are $2.31 back in November of 2008. Here's a good reason why you want to make sure that you tighten stops on the way up, on the way down. This equity went from $2.31 in November 2008, got up to a high out here on April the 1st, 2011 of $58. $58, folks, and 88 cents. And now it's made its way all the way back to $17.87. It looks like it has a lower price on its mind. $14.42 is going to be the .786 retracement level out here. You know, and when it made that high out here, it made it with a nice shooting star candle, which was followed up by a little bear sash candle on the weekly chart. You saw a little bit of a bounce, and then we got that big bearish engulfing candle May 6, 2011 during that sell in that 6-month unfavorable seasonal cycle out here. And so it looks like this is going to come back to at least the .786 area so long as it closes below 1793. And that's going to be the low from the week of February 22nd, 2013. It's at 1772 right now. Now, that says 1442. The reality is there's really nothing to stop this from coming. The only thing that possibly could stop this, let's take a look at it. The week, there was a little bit of a breakout. Makes sense, right? The week of September 4th, 2009. So the high there was 1467, and the volume there was 20 million shares. So if it's coming back into that with more than 20 million shares out there, and so far not including today, you had volume of 13 million shares. My guess it's coming back into that area. It actually says, okay, it ought to go test out the low of 1062, and I say, what the heck, if it's already down there, might as well make that 100% move and go all the way back to $2 and change out there. So that is on Verifone. PAY is the ticker symbol. Let's see here. What do we have that is moving to the upside? That's not an IPO out here. Big time percentage moves to the upside. Not really a lot. VMware is the biggest dollar mover here. And let's see what's behind that move. VMW is the ticker symbol. So let's take a look at this stock chart here over the course of the next 30 seconds or so. VMW, and that is, that's your biggest mover moving up here this morning, dollar-wise and percentage. Well, 6%. It's up $4 and change, and this thing is going basically nowhere out here. Well, it could run into its next resistance level, which is, you could take a look at it being really the May 22nd low of 73.42. So for all the bulls, if this is what's leading the charge, yikes. Hey, folks, have a great Thursday if you're off to start your day. Always remember, you have an amazing power within yourself. That power is so strong, it'll create a life of abundance, curing curable diseases, paint magnificent masterpieces, but most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Thursday. We'll look forward to seeing you soon.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.